So, what happens when official trade policy isn't announced in a press conference, but in a tweet? Well, a recent era of policymaking put that exact question to the test. And today, we're going to break down the wild ride it created for the global markets. Let's just dive right in with this. Imagine a historical trade deal with the EU is announced. Big news, right? The markets totally react. But here's the catch: nobody can seem to find a signed piece of paper. And that gap between the big announcement and the actual reality, that's exactly what we're going to unpack. It really brings us to the central question of this whole thing. What are the real-world consequences for the economy, for investors, for all of us when major policy is basically conducted by headline? Okay, so first up, a new era for trade. To really get a handle on the impact, you first have to understand the whole philosophy behind it. I mean, this was a very deliberate move to shake up how things had been done for decades. The stated goal was pretty clear: disrupt the old way of doing things, rip up and renegotiate long-standing agreements, and, above all, prioritize domestic interests. This America First agenda, it was a signal that the old rulebook for international trade was pretty much being tossed out the window. So how did this new approach actually play out in real time? Well, it created this fascinating and kind of chaotic situation where specific words, sometimes really unconventional ones, became direct triggers for how the market would move. For instance, take this phrase, panicking. It's not even a real word, but sources pointed out that when the president used it, it kicked off this surprisingly predictable pattern on Wall Street. It was almost like a secret password for investors. And the pattern was weirdly consistent. The first reaction to that word was often a market rally, a jump up. But then, almost like clockwork, the very next day, the market would drop. It created this short-term churn that some savvy investors actually learned to anticipate. And here's the key: this wasn't just a one-time thing. It became a reliable cycle of predictable volatility. After that initial pop and the inevitable drop, the market would often just struggle to find its footing and would keep on dipping for the next few days. Okay, now let's look at an even bigger example, that EU deal. So first, a historical agreement gets announced. Great. But just a few days later, a total reversal, threats of new sanctions and tariffs. And to make things even more confusing, key leaders from France and Germany basically said, hey, we're not actually on board with the deal as you're describing it. So if you start to really deconstruct the announcement, a totally different picture emerges. Was there a signed paper? Nope, never produced. What about all that pledged investment from Europe? Well, it never really showed up. And later, the president himself suggested the end goal might not be a specific deal at all, but just getting rid of all tariffs, which is a completely different thing. And here's a crucial point. It wasn't just actions. It was the threat of action that sent shockwaves through the market. You can see it right here in the chart. Things like tariff threats against India and China, or even just the announcement of new tariffs. Boom, they lined up with these notable dips in the S&P 500. For investors, this constant what-if became a huge risk all on its own. So this brings us to a really critical distinction we have to make: the huge difference between a big, headline-grabbing announcement and an actual, legally binding, signed-on-the-dotted-line trade deal. This little scorecard breaks it down perfectly. That historical deal with the EU, it turned out to be just a framework with no signature. What was announced as a brand new accord with Mexico and Canada? Well, that was actually a renegotiation of the old NAFTA deal, just with a new name, the USMCA. The headlines were all about brand new creations, but the reality was often just revision. So what's the real bottom line here? When you cut through all the noise and the headlines and you start looking for actual official paperwork, the number of major, brand new, fully ratified, we're talking signed and legally binding trade deals with our key partners, was, well, it was really small. But here's the flip side. While those big new deals were pretty rare, the tariffs, oh, the tariffs were very, very real. They were generating massive revenue for the government. In just a single month, collections hit a staggering $29 billion. And you've got to understand this contrast, because it's everything. The money pouring in from tariffs, that was a hard number, an absolute certainty. But the deals that were supposed to end the disputes and make those tariffs go away, they often stayed totally up in the air, never quite reaching the finish line. So what was the final economic price tag for all of this? What was the real cost of conducting trade policy by headline? That brings us to our final section, the cost of uncertainty. All right, let's just boil this all down. Why does any of this matter to you? First, public statements were directly fueling the market's ups and downs. Second, the big announcements were constantly getting way ahead of what was actually signed. And that gap created this fog of uncertainty, which became a huge economic risk factor all on its own. In fact, analysts often pointed to that very uncertainty, plus new tariffs, as the main reasons the market took a nosedive. And look, this feeling was everywhere. It wasn't just a few people whispering. As one analyst put it, there was a growing, legitimate question about whether these big, splashy tariff deals would, ever actually happen. That pattern of announce then reverse just created a ton of skepticism. And that leaves us with one final, and I think really critical question. In a global economy where billions of dollars can move across the world in a fraction of a second, is the way a policy is communicated, its timing, its tone, its level of certainty, just as important as the actual policy itself? The evidence from this period seems to scream, yes,